on a number of issues internationally that have been taking place and how they impact Trinidad and Tobago, you as an investor and our nation as a whole. Let's take a look at essentially what has been happening with the various areas in terms of commodity prices, in terms of global growth, and in terms of interest rates. And then we'll take a quick look at what has been happening in two areas of investment. One is Brazil and the other is India. In the first place, when we look at commodity prices, there has been significant swings in the price of commodities, and in particular oil, which has now been closely linked to the movement of equities or shares on the international markets. When oil goes up, equities go up. And when oil goes down, equities have been going down thus far this year. So then, in that context, what we have seen with commodity prices, and in particular oil, WTI, which is the benchmark which we use for our oil in Trinidad and Tobago, let's take a look at the first graph. And what you will see on the first graph is that for the year thus far, we've seen some wild swings in terms of oil prices, from a low of $26.30 odd up to a high of $43.70 odd cents at the end of trade on Friday. So essentially, all of these prices have been below the initial oil price marker for Trinidad and Tobago, and that has come down at the half-year position to $35 going forward. And what does it mean when oil prices goes up? It helps our economy, Trinidad and Tobago, and down vice versa. And oil prices going up in terms of the equity markets for investors who have equities abroad would see the impact as the S&P, the 500, is showing something up to 2080 in terms of its marker, when it was down by comparison at about 1825 during the last 4 months. How have interest rates affected us? Well, the U.S. central bank equivalent, the Fed, has, at the end of December last year, moved interest rates up to the 25 to 50 basis points, or 0.25 to 0.5% region, and made some indications to expect 4 interest rate increases in 2016. It does appear now, from the viewpoint of analysts and from the cooling position of the Fed, that there may be 1 or 2 interest rate movement in 2016. That is actually good news for us, because as interest rates go up, we as investors would find that our bond holding valuations in US dollars would fall. I'll talk a little bit more about that. So as you see on your second graph, the expectations are that interest rates will move up probably 1 time to 0.75%. Geopolitical situation around the world has been volatile. The expected freeze on oil output has not come to pass, as the Arabs have moved away. Saudi Arabians have moved away from the table, with Iran not coming to the table. Let's look very quickly as we turn to Brazilian performance. Geopolitics there has been very volatile with the move to impeach President Dilma Rousseff. While the economy is expected to bound down by about 3.6 to 3.8%, what has been happening in the markets is quite different. The markets have been turning around and has recovered most of the losses for the 2015 year thus far in 2016. Turn to our third graph, and what you would see is that whereas the equity market and the bond market in 2015 were 42% and 32% down respectively, in 2016 year to date, the equity market has clawed back up a full 38% and the bond market 33.6%. Expect continued volatility in that market, reflecting inflation, reflecting the political situation, and reflecting the very high policy rate of 14.25%. Let's turn quickly now to India. India, by all accounts, remains the bright spot in the world economy, showing the highest rate of economic growth among the large industrialized nations, to the extent of 7.5% expected in 2016 and continue another 7.5 in 2017. This in the context of China slowing down yet stabilizing as it leans towards more consumption growth rather than investment growth. Look at this chart on India, and what you will see is from the beginning of the year, as the markets were roiled in the first quarter, India's equity markets fell to a low of 15.5% somewhere towards the end of February. It has clawed back, and it also has recovered in the second part of this period up to the end of April, and it's now level pegging back to where it was at the beginning of the year. So good news in terms of turnaround, in terms of the oil price moving upwards, in terms of the Brazil markets and the India markets. These are the things that impact interest rates on bond prices. And we take a quick look at what's happening with, let's say, our Petrotrin bond in Trinidad and Tobago, US dollar bond, matured in 2019. And what you will see in the next graph is Petrotrin providing a yield of 7% in its 2019 maturity. That is, if you buy the bond, hold it until 2019, you will get an annual return to the extent yield to maturity of 7%. These are things for you to consider very carefully as you look forward, and in the context of the downgrading of Trinidad and Tobago over the weekend by S&P from A to A-. You'll see more details in our report. Go to bourseinvestment.com/content, where we provide more graphs and additional evaluation content for you. Have yourself a wonderful investment week. Look to the local newspapers for the various mutual funds that we provide under Bourse rubric as well as the Save Invest rubric. Again, have yourself a wonderful weekend, or a wonderful week ahead, sorry. This is Subhash Ramkalawan for the Bourse Report.